paradigm shift in inflation in terms of interest rates should help us to looking at credit growth, etc. This 13% has got decent collateral cover as well. We also have made significant impairments. Like I said, it's almost $1 trillion.
At the beginning of the year, we predicted this to be as bad as 15 plus percentage. Banking Act, the new one, is at the consultative level. Central bank, the stakeholders are talking about how to improve what is being shared with the banks.
As per the new Banking Act, there will be restrictions placed on us with regard to the lending to the SOEs. There has to be a sort of a mindset shift that will have to happen, because it will have to happen from the furthest branch and to the head office.
Hello, you're with Echelon's Turning Point, and we're discussing risk and regulation, managing operational risk, and the evolving regulatory landscape in banking. And we certainly have a very heavyweight panel with us today. Between the three of them, they probably control 50% of Sri Lanka's banking sector assets. And the first person on the panel today is Sanath Manatunga, who is Chief Executive of Commercial Bank. Then we have Clive Fonseka, who is Chief Executive of People's Bank. And we also have Jonathan Allis, who is Chief Executive of HNB. Sanath, Clive, Jonathan, thank you for joining Echelon. Let's start here, right? It looks like Sri Lanka's economy now has bottomed out. We are looking for economic growth and also for a revival in all activity. When you look at where we've been, I'll start with you, Sanath, and when we've looked at where we've been and what your expectations are for 2024 onwards, how does that change priorities for banking, versus what has been to what you expect?
Thanks, Shamit. For banking sector or any business, the priorities depend on the context. So if you look at the context which we were in last year, interest rates were very high, inflation were high, then economic stability was in question, and the IMF, the negotiations were at a very infancy stage. So today we have visibility in what we do. So I would say the context has changed. So then the banks should change the course. Their risk appetite should change, and also look at the economy with empathy, especially the players in the economy, because we have gone through hardships from 2019. The Easter Sunday attack, then the COVID, then the socio-economic unrest. So as banks, we have suffered a lot. Then our customers have suffered a lot. So now it's time for the banks to think about how to support our customers, support the economy in the positive context of these changes. Now the interest rates are at a level about half what we had last year. Then availability of exchange is there. Last year, banks were struggling to have exchange, the foreign currency to support imports. The inflation, although from a higher base, the inflation has settled down to below 5%. So in that context, I think the risk appetite, how we look at growth, has already been changed in banking sector. Then as bank, we need to see what sectors need our help. We have to prioritize. Let's say SMEs. And our economy went through these issues because of maybe not prioritizing exports, not giving sufficient attention to manufacturers locally who can manufacture import substitutes, then renewable energy. So things like that can be prioritized. And also industry like tourism. They suffered a lot from 2019. At the moment, tourism is booming. So we need to change our attitude, the outlook for these industries and support. And in next year, even construction should be looked at favorably. Industry like tourism, construction will add value to the lowest level in the economy, so that it is a good, maybe a way of reviving the economy. And we have set the context. So it's up to the bank to plan for 2024 in a very positive manner.
Sure. Clive, so Sanath lays out for us how fundamentally the context has changed from what it was to today, right? You had a very large balance sheet, state-controlled bank, right? Your context was slightly different to the past, to private sector banks, right? How has that changed for you? What are your new priorities, you think, in 2024?
As per the new Banking Act, there will be restrictions placed on us with regard to the lending to the SOEs. In fact, due to the cost plus pricing of the utilities like electricity, water, the requirement for funding from the state banks will also be less. So going forward, we also are gearing ourselves to lend to the private sector, corporates, SMEs, because we have 747 branches, we have 14.5 million customers, then a whole lot of SME customers are working with us, then even for retail. So that's where our priorities lies in the. So it'll be sort of a business change, Shamindra.
So if you put that into a percentage, Clive, what percentage of your book was SOE or state-controlled ventures in the past, and what do you anticipate will happen? If you put it in percentages,
it used to be about 52 to 53% for us. Now
that is lending to the state
SOEs,
overall.
SOE loans to the other loans and advances. Right now it's about 44%. So we expect this to reduce to less than 40% by around February, because there are a lot of repayments are happening, especially from the SOEs. Then along with that, there is a proposal to restructure CPC's debt from CPC to Ministry of Finance. So that will have a huge impact on the SOE component, because there will be a drastic reduction there.
So, Jonathan, these two gentlemen have now covered the broad thing. I think what's left to you is regulation and stuff like that also. And looks like there's going to be a lot of liquidity in 2024 if we're going to go by what Clive is saying. Again, same question to you. From where you are sitting, how do you think the context for 2024 and beyond is changing for the industry and for what you're doing?
So firstly, thank you for having me, Shaminda, and some great openings from Sanath and Clive makes life easy for me. So yes, paradigm shift in inflation in terms of interest rates should help us to, start doing, looking at credit growth, etc. Need to be conscious of the stage 3, which is, significant at 13% or at about, 1.5 trillion on a 11 trillion, banking industry balance sheet. Impairments are touching almost $1 trillion as well. So we need to be working hard in parallel to, revive these customers, encourage them, and the whole government mechanism, the regulator, the government, all of us must work together to encourage people to repay. Because you spoke of liquidity, that repayment actually brings in, further liquidity. If there is less government borrowing, SOE borrowing, that brings in liquidity. That then allows us to channel these funds into the right areas, also keeping interest rates relatively low. And that's a very useful thing. So this should go hand in hand. It's not sequential, it's in parallel, where we work hard on our recoveries to support tourism, revive, construction, revive some of the other industries, and look at new areas to growth. In particular, we need to look at some of the areas that we kept mentioning in the past as being important, like, are we really looking at import substitution? Are we trying to drive manufacturing? Are we driving our exporters? Yes, there is recession. Yes, there is global almost depression, but we need to find our sweet spots, right? We are a small country, a small economy, $1 billion exports. To move it 5-10% is not something that will affect the global landscape too significantly. So we need to, and entrepreneurship is at the heart of it, because we'll get our top corporates to diversify. But a lot is to help our SMEs and some of our other young thinkers, our fintechs and all that, is to start, helping them to start doing some business. It's not as if all of us should, grow up doing our O-levels and A-levels, the children growing up and going into companies and trying to sort of work. We must get into our curriculums the idea of entrepreneurship, business, and our whole infrastructure, financial landscape, regulatory landscape should support the growth of entrepreneurs in Sri Lanka and give them that, entrepreneurial spirit and that, risk-taking ability. And that's the kind of support structure we need to build.
So I'll pick up on something you said, Jonathan, and maybe we can all talk about this, right? You talked about how the condition of your balance sheet currently. Obviously, you have liquidity, but you have also so-called stage 3, that is non-performing loans, right? You have in the industry about $1.5 trillion out of a total asset base in the industry of about 11 trillion, 10 to 11 trillion, right? 13%, that's a significant number. Surely this must be taking a lot of your bandwidth as a CEO, right? What do you anticipate the industry can do about this? 13% is a large number. We are used to having 3%, right?
So I'm hopeful, and I think my colleagues will probably agree with me that maybe we have seen the bottom of this, and then you will see towards the year end this 13% reducing, and also we have got decent two important aspects. This 13% has got decent collateral cover as well, and with that, we also have made significant impairments. Like I said, it's almost $1 trillion. So, and in the stage 3, we have done more than 50% in terms of coverage. So, in terms of bank stability and our ability to withstand, we have taken the hit already over the last 2-3 years. Now what we see is the need for us to stay honest with these customers, continue to work closely with them and get them through that final hurdle and get them revived. Now they're generating enough cash flows, some to pay interest, some to pay a little bit of principal. Be patient with them. Those who are staying honest, those who are really working hard to make things happen and help them, and we can see this ratio reducing quite significantly. What is important is how we actually treat the willful defaulters and those who actually can pay and who actually avoid paying. Yesterday's papers spoke about the credit authority that is going to be formed for responsible lending. I welcome that fully, but equally there must be a credit authority for responsible repaying. Nobody talks too much about repaying. It's just left to the banks and to the individuals who lend to actually repay. We need to strengthen repayment, the legal system, and whether it's, the various infrastructure available, whether it's the, arbitration, mediations, all those need to be strengthened. Insolvency laws need to be strengthened so that people will see a greater requirement to keep repaying and continuing to perform in the industry.
Sanath, I'll bring you in, and as CEO currently, if you look at how you're spending your time, right? I'm from the outside, I'm thinking, okay, you must be spending a significant amount of your bandwidth managing the balance sheet clearly, and also a significant amount of time trying to see what you do with this 13% NPL. That's the industry-wide NPL, right? Is that a fair assessment?
Yeah, actually, I'll take a cue from Jonathan. At the beginning of the year, we predicted this to be as bad as 15+%. But we have seen a plateauing trend for the last 4-5 months with the interest rate reducing and also economy reviving to some extent. We have seen the pressure on the loan book has reduced. So there's a good news that the ability for repayment is better than what we expected last year. Second thing is, as Jonathan said, the banks don't want to go on the foreclosure unless there's a willful default. Because foreclosure is not going to help the borrower, bank, or the economy, right? We have a lot of foreclosed properties. Liquidation is a problem. So because of that, always, as I mentioned, the word empathy, the banks are supportive. If the customers come early, okay, impairment is a P&L side of it, but if we can support the customer to revive, one day we can reverse this. So that is the attitude the banking industry is having. So always, if the customer comes forward and tell about their difficulties early, the banks are able to help. But unfortunately, some of especially the SMEs go through, going to high cost borrowings, sometimes informal money lenders, and they get into trouble. That's where they need to have this approach like a partner. You have to go to the bank, explain the situation. So then we have resolutions because we have dealt with many customers and gone through many scenarios, and we should be able to guide, especially the SMEs who don't have maybe a in-depth knowledge on how to go through a restructuring. So that side of it can be tackled very easily if they come forward and tell because we went through moratoriums, we rescheduled. Some of the delay, when we see when rescheduled facilities are getting delayed, we give more time for the industries to pay. So tolerance levels are there. We have gone through a lot and we tolerate that. But the thing is, always you have to have that partnership mindset, bankers and also the customers. Then it's easier to get through the challenges.
Right. Clive, I'm thinking your challenges are slightly different. Now you're talking about growing your book to SMEs and retail customers, right? Versus what you've had in the past. But is managing the repayments from the state, which you said you were at 52% of your book had been lent to state or state-controlled institutions, to making this transition the one that's taking up all your time and bandwidth these days? How is it for you?
We speak to them daily, and we speak to the Ministry of Finance and the entities, different entities. So we know that there will not be any sort of new requirements from them. So that we are very clear. And as far as the SME customers and our corporates are concerned, we have successfully, we have this program of a rehabilitation unit. So that has been a huge success, and there are many success stories where, we restructured, we rescheduled, and we sometimes extended the tenors, and those have got to performing stage because of the early sort of action that the borrower and the bank took.
Jonathan, I'll bring you in. So, in this context, the regulatory landscape is also seeing several changes. I think predominantly because you will have soon a new banking act, right? What will this change for your industry and for your business? It's come in 2024.
So it's, extremely exciting times. I'm sad, I'm kind of winding down at this stage. I wish some of this came, and I used to tell them that it came about 10 years back, would have been very useful. So 2-3 big areas in terms of, having better governance, better screening of the people that you're going to get onto your boards and as your key management personnel in office to your corporate management team. So makes lens for stronger boards, stronger management, more independence, and it was there even in the IMF governance diagnostic study, beautifully laid out in terms of, the to-dos and the not-to-dos, which is, if we just follow some of it, it will be very useful. So that is one aspect of it. Then you're going to see significant changes in the single borrower limit, and also strengthening of the related party, clear identification, broadening of the definition, which also then means that we would need to contract some of our lending, and our concentration risks will reduce. And whilst there is liquidity in the industry, it just compels us, in a very nice way and a positive way to spread our risk, to diversify and accommodate further industries. And this really helps us to then start looking at SME, emerging corporates, the microfinance, and, doing better kind of digital lending and stuff like that. And it also encourages corporates who have got big exposures to diversify their capital structures instead of only sort of leveraging themselves and then seeing themselves over leveraged, growing. If their growth over the past decade is propelled by leverage, today they must be finding it difficult with the interest rates going all over the place, right? So they now will see the importance of bringing in equity, knowing that there's only so much that they could borrow from companies. Corporates will start looking to borrow from overseas. They'll be looking to actually list their companies more and there'll be more stock market activity. There will be more international participation in our stock market given greater participation of the local entities. So I think all these lends itself beautifully into, some of the banks concentrating on looking at investment banking, commercial banking, SME banking, development banking, getting a little more structured and segmented so that you really focus on your niches and start playing to those areas, while corporates look to sort of deleverage themselves and reduce the risks in reviving themselves.
Clive, it's no secret that the government and the CPC and the CEB are two of your biggest customers. Now there is the new act that will bring limitations on, how much you can lend to any single party. Does the act make exceptions for the government entities?
No. Right. So it will be the single borrow limit will be applicable for the SOEs also.
Right.
So good thing is they have given a time period. If I remember right, that's about 2 or 3 years. So for them to bring the exposure to the SBL limit. So we've already are having discussions. Actually, I can tell you 1 or 2 entities, they are fully committed because we've seen the cash flows, projected cash flows. From that, we are confident that they can actually come to the SBL in less than that period that is provided by the central bank.
So it looks like then these opportunities to lend to these institutions will also open to the sector in general.
Let me add now. First thing is Banking Act. The new one is at the consultative level. Central bank, the stakeholders are talking about how to improve what is being shared with the banks. Especially there was a regulation which was put forward by CSC on listing rules around governance also. There could be certain contradiction with the Banking Act. So this consultative paper will take all this into account. As Jonathan said, mainly the governance and resilience is what is expected. And this might push banking sector consolidation, in my personal opinion, because if you see the top 5 banks in the country control about more than 75% of the assets. So it is not a good thing for our industry where we have 20 plus banks. So here with the single borrow limitations, ownership limitations, and also central bank is promoting consolidation, so that will happen and it will create a more resilient, robust financial system. And already the Banking Special Provision 17, which was gazetted in this year, that talks a lot about the creating the resilience in the banking ecosystem, including payment and settlement, the banking. It talks about how to handle a stress situation in a bank or in the sector. So those things will add more resilience and robustness for the entire industry and the ecosystem, where the financial sector and the systems will have a huge impact on the economy. So the central bank is taking these proactive measures to create this robustness so that even during the worst periods, none of the banks went bad. So that's a good thing. But you can't take a chance. So I think with the Banking Act, which will come next year, and with this special provisioning and also the Direction 16 on technology resilience, I think the regulator will create a lot of confidence in the sector And with the consolidation, it will be more, maybe bigger banks to even go into the regions kind of thing. Maybe foresee in the next 5 years.
Consolidation has been talked about for a long time, but it hasn't, there hasn't been a genuine attempt. I think there's maybe been one or two, right, at all, if at all, and those haven't also come to anything. Some say this is because the banks' leaderships aren't willing to do this. What's your view on that?
It's more than willingness. I think there should be some commitment from the shareholders to the management to look at the industry and look at the organizations. It should not be protecting their personal domain or the maybe domain as a bank or an institution. But for me, the leadership in the banks will support. Regulator also has a role to play, and certain things like capital, support from maybe institutions like World Bank, ADB, and technical consultation or technical expertise from international bodies will help the local banking industry to go through this part, because we have never done a big consolidation. So I think none of us are very confident how this is going to turn out.
Yeah. So it's certainly not to make small of it, because consolidations are, about cultures, about, it's not about putting just two balance sheets together, right? But at the end of the day, you can, Jonathan, go to shareholders and say, this will create more value for you, right? Because a larger bank is lower cost to run, right? Is that conversation something that you will think you can have in 2024 and onwards?
So we've been having this conversation for the past many years. We've been talking to banks as well as our shareholders on a regular basis. Many papers have been put to the board in terms of our interest in basically consolidating has been kind of known. And now with the new Banking Act, the potential changes in the single borrower once it's finalized, and your capacity, ability to lend to these corporates being, somewhat impaired or reduced, we have to start looking at larger capitalized banks which can go into the region. We need to start playing that role as well, and knowing that we have a huge role to play for our country. So we should be able to sell the story. Yes, there are challenges integrating systems, rationalizing branches and staff and all that. But it's also a good thing at a time when the banking industry is losing so much of its staff, going overseas, etc., right? That this kind of thing happens. And with the level of digitalization, automation, RPAs, AI work that we are doing, you do not need the number of branches and the self-service machines that we have spread across the country, with moving our clients to mobile banking and digital banking. So all of it, Banking Act, digitalization, the ability to reach us, the staff challenges, balance sheet constraints, all that lends itself beautifully to, and the regulator's support is there in no uncertain terms, to actually at this time for the banks to get together and look for some partners and do it on a voluntary basis.
To that, actually, one thing is the talent. Talent attrition is a challenge now. And other thing is, if you see in a locality, you have, let's say, 10 banks, right? All will have ATMs, the maintenance. If we put a digital platform, all 10 banks will pay a foreign vendor some amount. Actually, we are bleeding dollars to overseas. But if those are about 2-3 big banks, then there's a lot of, the scale where we can reduce the cost. And we can even develop our own technology, software, so we can invest in this. So that will be an investment for the future as an industry. And the money will be in the country. and our talent can grow on
And we'll
that.
be retaining our IT talent because they'll see a huge scope. And if we are investing in our people in Sri Lanka as opposed to bringing foreign, like import substitution is not just for the goods and services, that we consume, but even the very things that we do, we need to look at our local.
One of the conversations you will be having with shareholders is your ability to give them a decent return, return on equity, right? That has possibly been very challenging in the last few years, but your shareholders are not going to be patient forever, right? How do you fix this? Is consolidation a big ticket to fix this? If not, there's only so much time they will give you, Sanath, before they become fairly impatient.
So to answer that, the short-term challenge the industry is facing is, now we went through the SLDB restructuring in a very positive manner. ISB restructuring is the big hurdle we had to go through. We have lent to the government. We are going to take haircuts. That impact should be minimized for the sector, not from a shareholder point of view. If we are to support the economy, the bank should retain this money which is given to the government, because ultimately already all the banks have got almost 45-50% haircut provisioning on this. So this is a kind of a bad debt. So if the banking sector, two things. One thing is, if the local banks can get part of this money in rupees, like SLDBs, it will create a lot of confidence in the sector. Shareholders will be happy when we go to the market next year. Let's say a bank goes to the market to raise capital. We have a story to tell that the government, the regulator looked after us. We are on a growth trajectory, support us with capital. So capital is even needed for consolidation. Second thing, still we have not got the taxation on this cleared. So if we have to have a haircut and our profit is taxed, it's a double whammy, which we are going to fight. But as an industry, we are not talking of individual banks. If the industry get weakened, let's say a bank's capital is minus 1 billion, that means 10 billion going to the economy by way of loan is reduced. Then you can't support the economy. And also, as a sector, if you go to the share market, as a sector, we are not the most valuable, maybe the banking sector is not the most valued share. All the banks are around 0.5 to 0.6 of the book value. So that means the investors are reluctant. So they have an issue with this industry, how this will turn out to be. So the ISB restructuring is the single largest short to medium term issue the industry is having. I hope as an industry we are lobbying, the regulator, government, everybody, even the outside creditors should think it in a more wise manner and support us.
Just to get a sense, background of outstanding commercial loans by the government, the so-called ISBs, the Sri Lankan banks hold about how much roughly?
About $1.25 billion.
Right, out of
maybe 1.8 in total. I think the Sri Lankan component is about 1.8 billion.
Right, that is in Sri Lanka, but the banks have about 1.2.
1.25 billion.
Okay. Right, so that is out of a total outstanding of about 12 billion.
12.5 billion, yes.
12 billion plus, right? So Jonathan, Sanath is suggesting that, the case of the Sri Lankan banks should be looked at in a slight exception when when the final agreements on restructuring this debt is arrived at. What's your input?
So we talk of a level playing field, and we fully appreciate that and respect the agreements that are in place. But just think about that international creditor who is looking at a new bond, a restructured bond post haircut. They are dependent on the economy taking off in order to get their repayments and their coupons on the new bond and the value of that new bond. But if the biggest catalyst, who will drive this economy, which is the banking industry, is not stable, is not strong, and is not in a position to support that, then they are actually not helping themselves. So to that end, Also, you need to take the full picture when you're doing this calculation. I think you can't just take a silo as in an ISB and say level playing field, everybody takes the same. You need to see what the banking industry has taken over the last so many years in having these bonds with us and supporting the economy, having a 1.5 trillion, stage three credit portfolio, all cost. We can talk of COVID, we can talk, but basically it's an economic crisis. And it's an economic crisis propelled by poor government, poor governance, bad leadership, right? So we have got to take the brunt of it. It's not that all these bad debts are a cause of people not doing their business properly, right? So whether you're a bilateral creditor or a bond creditor overseas, you need to know that the predicament that we are in, it's not an isolated ISB transaction. We have got multiple factors. You take all those together, we have taken our fair share of hit already. And that's where people need to be a little more understanding and give us a chance to, play our role to revive this economy and show what we
Is
can
there
do.
precedence for what you're suggesting, that some part of the haircut be compensated with a rupee instrument?
So SLDB is the
Yeah.
example.
Yeah. Plus, I think internationally,
Internationally,
there have been a
yes.
few bonds
Yeah.
which have actually got
In
restructured.
some other countries.
Because these bondholders, I mean, surely they will want, as a principle, everybody to be treated equally and fairly, right? Do you
Fairly,
see-
yes,
Yeah.
but equally is different. As Jonathan said, the banking sector in Sri Lanka has a role to play. Our risk profile is different to them. And this is a weak argument, but if you see, the banking sector invested at par. But some of the creditors would have bought it at cheaper prices, right? It's a weak argument from an investor point of view. But you have to think whether in what context the banks had to invest and in what context they bought the bonds. So I'm directly saying because I'm talking on behalf of the industry. And also, as Jonathan said, we have gone
for
through.
us, it's LAR.
Yeah.
For them, it's a
It's a
evaluated investment decision they made.
LAR is what?
It's a liquid asset ratio for which we need to keep 20% of our, assets in a liquid form. And this is one of the liquid instruments. We market foreign currency heavily, NRFCs, and there was no avenue to park it in terms of loans, etc. So you parked it in ISBs and SLDBs.
Sure.
And this is what we give in order to give confidence to our depositors. By the way, your deposits are secure because we have put more than this percentage there. And when that gets haircut, what kind of confidence do we give our depositors?
So our responsibility compared to creditors is huge. One thing, these depositors' money. We can't create any shake in the industry. Second thing, we have to support the economy to grow. Third thing, we should not neglect the technology investment, digitalization, so many things to be invested. So unless we invest today, we may be behind in digital adaptation. So those things are for the country, for the economy, and also always, although we say banks, these depositors, shareholders, borrowers, we are in between.
Clive, I didn't bring you in on the ISBs because People's Bank has virtually no exposure to ISBs. But when you look forward from where you are, and we are slightly changing gear here, right? You've got to now build an institutional capacity within People's Bank to grow your book, because you've been able to park. You raise deposits, you park it in government. At least 52% of your assets were government. This transformation is not going to be straightforward or easy for you. Is this the biggest thing that you're looking at right now in a challenge?
You're right, because there has to be a sort of a mindset shift that will have to happen, because it will have to happen from the furthest branch and to the head office. So everybody has to be geared, has to basically take advantage of this latest phenomenon. So I mean, you will have to. I mean, even branch itself, credit evaluation. Then it will go to the regions. We have 25 regions all over the country. Then the head office. So even the capacity building will also have to happen at the same time. So that is the main challenge that we are having. So it's sort of a huge we are anticipating a huge business shift. So that's our main challenge going forward for next year.
From where you are, what do you think is the biggest risk? Not necessarily in terms of this transformation. Obviously, you can see that you need to do it, right? It's a matter of now execution. But there are risks that you can't fully be prepared for. If you look at the Sri Lankan outlook, Sri Lankan economy, its governance, its politics, Jonathan alluded to some of these. For you, what is the biggest risk? The ones that you can't control but have to respond to.
See, for me, the biggest risk would be the volatility, I mean, exchange rates and the interest rates. There again, I would say the interest rates volatility is a bigger risk than the exchange rates for us, for a bank, because banks, we have NOP limits, we buy and sell within that, so we will not get impacted hugely. But because if you have to take about retail loans, quite a substantial loans and advances are parked there. So most of these retail loans on fixed rates. So we've seen interest rates going from single digits to 30%. So if it's in everybody's interest if the interest rates are maintained within a sort of a reasonable. I wouldn't say that maybe 5-6% or single digits may not be sort of the most optimum rate. So probably even it's up to 2 to 4% band, or I think that is acceptable. So that is doable for us.
Right. Jonathan, from where you are sitting, you must be thinking about those risks that may arise, but not ones that you can directly control. What do you think Sri Lanka's biggest such risks are that can still impact your industry?
So for me, the people risk is a real risk in
Right.
terms of, us kind of telling our youngsters, leave and go, there's nothing else for you here. And then but part of them should be coming to the banking industry and they're not coming anymore. Where do I get my staff? What is my next 5 years staffing strategy, recruitment strategy, and what kind of portfolio of staff do I maintain? In some way, I need to be conscious of my operating risk. Given the environment, we need to need to raise the security levels, whether it's on technology, whether it's information security, whether it's cyber security, or just plain security. We have seen heightened, the need to sort of have greater awareness amongst us. The credit risk is a major risk that we need to be careful, because it's not, as Sanat started off by saying, we need to broad base, we need to diversify, we need to go into new areas, and we can't shy away from our responsibility and doing just AAA lending or, a AA plus lending. That's our role, really, as financial intermediaries, to take those deposits and shareholders' money and really make the economy work, and to spread it across and not, limit it to 10. And the regulations that are coming in kind of support it. What we need is political stability, economic stability, policy consistency. Why we are in this state is because in the absence of it, you have these huge peaks and troughs. Now, how do you do 3-year strategic plans and go with a straight face to a board when you can't see 6 months ahead? People ask, what's the year-end exchange rate or interest rate? It's something that you don't want to even take a guess at. You need to have, one day when it's 30%, you're not supposed to lend. Next day, in 6 months' time, it comes down to 13%. Now you've got to immediately overnight start lending. Don't forget, now I've already ramped up my fixed deposits at 20-30%. Which are still there priced at that. So you have to run a business and you have to sort of play the margin game. So managing that balance sheet in a situation like this is quite challenging, and being able to, whilst we know we need to manage our capital, we need to go overseas, we need to get leaner and meaner, we need to automate, we need to digitalize, we need to increase the knowledge and capacities of our staff, and we are fully cognizant of our responsibilities and will do that. A little bit of help from the environment and the macro environment and the fiscal side as well will help, and then broad basing our tax and collecting tax from others instead of only hammering the banking industry is something that will help as well.
Sanat, same question to you. I'm sure you sleep well, but if probably if something keeps you up at night, what would it be?
Yeah. So as Jonathan said, the policy consistency,
Right.
and connected to the volatilities Clive was talking about, we should not celebrate early. Okay, last 6 months we are recovering, we are better than what IMF predicted. But world over, there are examples where you celebrate early, but unless the policy consistency and seriousness is there, you can go into a worse cycle. So we should prevent that. So to prevent that, there should be ownership of these decisions, governance around that. It should not be for some political or other gain. Now there will be election next year. So we should not go off course for short-term gains at the cost of the economy. If you see the countries who have thrived, including in India, one thing is they had policy consistency irrespective of the political changes. We didn't have. We always change policies. We go offline with IMF or the financial disciplines. We compromise money for votes. We just give free money. And that there's no transparency in how the tax money is spent. So there are a lot of things at policy level we have to fix, and we have to be seriously consistent. If you have that, we can celebrate for a long time.
That's a great context, great way to put it. For the longer now, for instance, people are complaining about the high levels of taxation. Right, individuals feel it. Income earners now feel it with both income taxes and VAT. But high taxation is something you have been living with for a long time. Do you think now is the time to start thinking about changing that?
We are late to think. Now, as bankers, the banks are paying one of the highest tax rates, over 55%. As employees, we had been paying pay tax for a long time. And if you see, the economic crisis started with the fiscal deficit created by not collecting taxes from 2019. So we had been telling all the governments, the institutions, to increase the tax net. Don't whack the people who are paying taxes. They have a limit, right? And also when the economy is shrunk, if you tax the same people, anyway the share will be less. So there are so many ways in other countries they tax people. One is, there's a good suggestion in the budget. If you are to open an account, you have to have a tax file. It's fair enough. So you declare your income. Account. Yes. Second thing, there are a lot of proxies. We have been telling the regulators. Petrol is pumped with the QR code. It's recorded. RMV has the vehicle details. CB will have the electricity bill. You can't pay electricity bill of 50,000 if your earning is 60,000, right? So there are so many simple ways to increase the tax net within few months. It should happen, right? Already late. Other thing is, if Inland Revenue, Customs or any other revenue collecting authority need collection accounts to be digitally enabled through the banks, all the banks will support. It's a few months affair. When the vehicles were imported with permits, the customs, RME banks were connected. When the LCA is amended, it said the customs. It's not rocket science. It's the willingness. There should be a willingness from the top. And if you don't collect the taxes, the country will go through the same cycle. Second thing is, as I mentioned earlier, there should be transparency and responsibility in spending the taxation. You can collect, but if you are just, spending that without any responsibility, without prioritizing the sectors, then it's like a hole in the bucket.
Jonathan, what can the banks do in particular to help the government widen this tax net? Is it realistic? Now, they seem to have an expectation of the bank to support the widening of the income tax net.
So we were a bit concerned, firstly, because of our customer confidentiality that we have, and we are not supposed to divulge information pertaining to our customer. But then, this is a regulatory body, and if they ask for information, we just cannot avoid, making that available. And now the budget itself says to open a current account, you need to have to know. That's one way. The other, Sanath has already said, there are many, whether it's a utility bill, your telephone bills, your electricity bills, your cars, your houses that you buy, those have got to be, used. Then all government payments can actually be digitized. We also want to digitalize the country, right? There's a big cash economy that goes out, that's happening outside, right? There are people that even, we engage, and we don't realize that maybe what I pay is, let's say, 5,000 rupees, but he gets that money from 10 people during the day. That's 50,000 into a 30 is 1.5 million, and that money is not anywhere so we have to find a way of getting some of these transfers. A, it reduces the cash in circulation. B, it actually gets all these recorded in the banking industry, and it's available for taxers. So even to help, let's say, SMEs. Now, if you can actually encourage SMEs, our big plays, SMEs, microfinance, etc., to help them, we can actually make it a condition that they actually produce accounts and start paying tax, right? If that is part of it, we can, let's say, give a interest rate, or we can make some of these low-cost funds that are made available from the ADBs and others channeled towards these segments, so that, they all start paying taxes instead of just showing accounts. Banks should stop lending against management accounts, right? Not for a short time of 3 months or whatever, but on a regular basis. If you don't get audited accounts, maybe you should stop lending. Small changes like that will encourage everybody to come in to have producing proper accounts, paying their taxes, and everybody playing their part in the economy and not just leaving it to a handful.
And a few other points to add to that. We should start with a digital ID. If India can have billion plus digital IDs, it's a matter of few months or 1 year, let's say, we can have digital IDs. So everything is connected. In other developed countries, everybody pays taxes, right? It's automatically done. It's a duty, and they are not worried because they will not say, he is not paying, why should I pay? So that kind of mentality is there in Sri Lanka. And also in those countries, it's a criminal fraud if you don't pay taxes. Even celebrities, the sports stars, they are caught in this by having plus or minus some tax payment deficit. So that culture should be created. So if you can digitally connect, as Jonathan told, digitally connect. Now India, QR payments are going viral. Even smaller payments are QR. So if you digitalize, everybody will be paying. Then there's no complaint that he's not paying, I'm paying. I don't think. So that culture should be built. Again, there should be some initiative from the top, and stick to that.
Clive, this expectation that banks help widen the tax net, from where you are, you have a large retail customer base. Does that apply to you? How realistic is that?
See, it applies for all the banks. People's Bank is one example. See, as far as banks are concerned, I think we have the systems in place. Like these two gentlemen said, it's the tone that has to come from the top.
Right. And it's
a big way that we can help is where we started the conversation. We help our customers, we help them grow, they make more profits, they pay more taxes, is a sure way. That's probably the primary way in which the banking sector should focus in the next 2-3 years in helping the government build the tax.
tax or increasing government revenue is the big challenge. And it looks like, Sanath, also from your interactions with these revenue agencies, do you realize that there is a permanent capacity issue, versus the goal, it doesn't seem like our infrastructure is ready for that.
If you see audit companies, they have this audit trainees scheme. Likewise, there are a lot of aspiring accountants. So if you hire them and go behind the people who are not paying taxes, is worth.
Right.
Let's say you pay 50,000 for these graduate trainees and get into the revenue authorities and digitalize everything. So then it's a matter of, monitoring. And even if you put 5,000 people at 50,000, just see how much of revenue they can collect. It will be 20, 30-fold revenue they can collect. The issue is the tax net is not strong. And we are not going behind the people who are not paying taxes. There are so many proxies. People is not an issue, because I have heard that some government institutions are having degree holders as excess employees. When they want to give a job, they give. But whether the job is giving the correct output. So why don't you man this Inland Revenue Authority, customs everywhere with lot of staff? Yeah, they can justify the cost.
Why don't you collect your withholding taxes from the banks directly? Maybe even increase a little bit of withholding tax, but make it a final tax, right? Why are you having the manual file systems, right? It sends the wrong message that there is something more to it than just collecting the taxes. Why is it so bureaucratic? Why is it so unproductive and long-winded? Shouldn't it be a simple, process where you just go online and pay your taxes? Yeah.
As we wrap up, I'll ask each of you to also tell us why you're hopeful and optimistic for Sri Lanka. Right? I will start with you, and you can also add your closing thoughts to that. I'll start with you, Jonathan, and come this way. Are you in a hopeful place for the future of Sri Lanka? Why?
I am. And I have no interest in looking anywhere else other than, Sri Lanka, because I believe that, we have got a fantastic opportunity. Some people might say we are at the bottom, we can't go any lower, we can only come up. But I would say we continue to come to this crossroads, right? And we just need to take the right turn at this particular point. Do not expect more help from IMF. Don't wait for further reschedulements, further roundtable conversations. Make this count. Already there's a little bit of lethargy, procrastination that can be seen. You have a job assigned to you in this particular 10-year program. Play your role. Let the others play their role. You play your role. I have got to play mine. If each one, whether it's regulator, whether it's government, whether it's about SOE divestment, whether it's, some of these sales, whether it's small government and, managing with the skills that you have, and us helping, looking at areas, managing our foreign exchange, driving tourism, driving exports, helping our migrant workers, starting businesses locally, manufacturing, entrepreneurship, improve transparency, governance, make this a great, attractive place for people not only to visit as tourists, but to come and do business as well. Our BOI should not be doing 1-2 billion a year. Look at the countries around who are doing 10-20 billion a year. Why not Sri Lanka? This is probably, as I have always said, the most beautiful place in the world with the most beautiful people in the world. Then there can't be anything that should stop us from, being positive and making sure everybody will help if we remain honest to ourselves, actually.
Clive, what gives you optimism?
I think we have, as a country, we've come a long way from where we were. And I think we have taken a lot of hard decisions. See, cost. Just take an example of electricity. Nobody thought that electricity prices could get increased this much. So, as a country, I think those hard decisions has been taken. Full credit to the authorities for that. I think it's a case of taking this forward. So, you should not lose the momentum. And I think we are in a sort of a growth trajectory.
Yeah, To answer that question, I answered in your earlier program also. Are we having natural disasters? No. Are we having a talent shortage? No, we have very smart people, educated people. Even in universities, tertiary education, 1.4 times women are there. The inclusivity is there. Geographically, we are not a landlocked country. We are nicely placed in a very good geographical location where we can aviation, logistic handling. We don't have any political issues with outside countries. We are neutral. And we have tourism, we have beautiful weather. So what is missing is the leadership and the policy consistency. It's a man-made disaster, as I mentioned in the earlier program. If we fix that, everything will get into place. But unfortunately, for the last 50, 60 years, it has not coming. We have a lot of lost opportunities where the multinationals came here and went back, where big universities tried to put their universities here, the big factories where India got advantage because we were not serious. So always the leadership and willingness to contribute to the country, if that is there, 5 years is enough for us to turn back.
Sanath, Clive, Jonathan, this has been a wonderful conversation. I thank you for being so candid and open about our challenges across the economy, the need for leadership, and also, how banking can be a bigger contributor to economic growth. Thank you very much indeed.
Thank you, Shaman.
Thank you for having us.
Thank you.